Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risks. Today I'm covering Netflix, the streaming company. Now let's start with the company's business strategy. Netflix streams content. That seems pretty simple, but how do they get that content? They license most of their content from other creators, so other studios or small creators. They also create some of their own content. To make money, they primarily sell subscriptions to users, and they've also been layering in advertising to lower that upfront cost for a lot of those initial subscriptions and generate a little bit more revenue with advertising. But what's the growth opportunity for Netflix today? The company has over 300 million subscribers. In 2025, they stopped reporting that subscriber number, but we know that that was over 300 million at the end of 2024. So they can still add subscribers around the world, but they are becoming a little bit more saturated than they were just even a few years ago. So the two major levers they're going to have to grow the company is to increase the price per subscription and then increase that advertising revenue as well. Current estimates are advertising revenue could be about $3 billion in 2025, and that could triple by 2030. But as with any company, there are risks in streaming and risks to Netflix's business model. The streaming business is just simply getting more and more competitive. As the cable bundle has fallen apart, every company has gotten into streaming in one way or another, and they are all bringing something different to the table. Disney, for example, is bundling Disney Plus, their proprietary content, with Hulu, general entertainment, and now ESPN going over the top this fall. That's going to be a very different offering than Netflix has, which has very little live sports. Then you have more premium content from HBO Max or Apple TV. Peacock and Paramount are bringing lower prices to the table. So does subscription fatigue start to set in? And does Netflix start to see not only its subscriber numbers start to churn a little bit more quickly, but also have a little less ability to increase prices on those subscribers? That would be the risk for the business long term. Netflix has also not proven the ability to create phenomenal content. So they have changed that strategy from putting billions of dollars into making their own content to actually licensing most of their content from other studios. And the final risk is simply Netflix's valuation. Stock is trading for 13.8 times sales and 57 times earnings. The stock has benefited from the company's growth, margin expansion, and even multiple expansion over the past few years, but that could become a headwind if the market starts to see this as a slightly slower growing company that should maybe trade with a price to earnings multiple of half or less than what it currently does. But what's my prediction? Netflix is a clear leader in streaming, and I don't think that is going to change anytime soon. But the price is expensive and growth is starting to slow for Netflix. So there are structural headwinds that the company is facing. I think Netflix performs phenomenally well as a business over the next 5 to 10 years, but that doesn't mean the stock is going to outperform the market. In fact, I think Netflix stock is going to underperform the market simply because it's becoming a much more mature company, and that mature company is going to take time to live up to the valuation that's already priced into the stock. So to recap, Netflix is a leader in streaming. The market has rewarded that with a very, very high multiple. But the questions and risks about Netflix's future come down to increased competition, their ability to increase prices, move into advertising, and live up to their current price to earnings and price to sales multiples. Now, at the Motley Fool, your comments make us all smarter. So please comment with your own research about Netflix. Let us know what you want us to tackle on Crunch Time next. And of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. See you here next time.